Update on my thoughts on the markets and what I've been doing. Sorry, I haven't done a video for a bit, but I've been kind of busy with the markets and had a really good day yesterday, so I thought I'd go through that. But first, I thought I would just talk a little bit about NAT, which is a stock I talked about twice. It's a tanker stock, and people were excited about this because all the excess oil we had. But I saw it coming down, and I mentioned that it was below the 8 exponential moving average, and I didn't think that you should be buying this because you're in a downtrend. You have this basically a shooting star. So you can see this big, huge wick here. So that means that it was up here and it got pushed all the way down. And then you have this like downtrend. And once you get below the 8 EMA, I wouldn't probably buy this. If you want to look at other indicators, there's like a MACD. So that's a moving average convergence. You see how it crossed here and it's still in this down trend. The funny thing is, so there's people that kind of fall in love with the idea, and they're going to start making tons of money and everything. But if in the future, if they start going up, it's a potential purchase. Like right here, it's on an uptrend and they crossed up over this point here. If I pull back a bit, you see how it was kind of flat. It broke through, it had an uptrend, and then you get in. And then once it starts coming down, you get out. But if you look at another tanker stock, which is shipping, a stock called Eagle Bulk Shipping, I got 19% yesterday. This stock was here. And the reason that you would be in that stock, there's a few ways to look at it, but you have a candle that moved above the T line, the 8 EMA. You have, and it gapped up from a doji below that. So that's like an energetic kind of sign. You have a hammer here. So that's a reversal. You have a hammer signal. So it looks like a hammer. It came down here, got pushed back up. Then there's a doji, then it gapped up and it's above the T line. That's an early entry. If you look at the downtrend, you want to see a higher low. So that's over here. You have a low and then you have the next higher low. So it went up, came back down and it went up again. So there's another higher low. So once you saw that second one, this would be a good entry. So it creates a trend line you could draw from here to here. The other thing is once you had a pullback and you have a positive up day, that could be an entry right there. And then other people look for maybe a break above this high. And then, you could get in once it breaks through there potentially, which would have been yesterday. So there's different entry points depending on your approach. And also when you see that you're close to the 50 and the 34 moving average, you may or may not want to get in there. So if you're thinking about buying right here, you might want to hold off and see if it gets through the 50. So another entry point could be here. And also once it breaks through the 50, it tends to come at some point, it might come back and test the 50 again. If I move that arrow, you can see these two wicks here touch the 50 moving average. It's amazing how often this works, but that's a retest, they call it, of the 50 before it takes off. So if you're waiting, if you're more conservative, you want to see if it retests the 50 before you buy. You don't want to buy the first cross because it can just come back down again. But so like I said, that also coincides with the establishment of a higher low. So anyway, just to contrast, a different shipping company, and they ship products and stuff like that. You don't even have to really know what a lot of these companies do, and you don't have to make sense of everything that happens, but you just look at the chart. So if we look at the say the S&P 500, you've had this really good uptrend here. And from the low, it's been up quite a bit. But we're above the 200 moving average of 50, and that's sloping upward. And so if I just zoom in a bit, you can see we've had this nice uptrend here. So there's been a lot of fear and a lot of people just questioning why it can be up with all the stuff going on. But, try not to worry about that and try to focus on what's happening with the stocks in the stock market in terms of the charts. So I showed you Eagle, that did really well yesterday. Hibble is a 3x ETF, and it's been in a good uptrend here, and it made 15.5%. Actually, I'm going to turn off the, yeah, it actually hasn't been updated yet. So 15.6% yesterday, which is incredible. And you can see that it's been an uptrend. So you don't, what you'd like to do is figure out where to get in, and that would be, like I said, at the establishment of a higher low here. That's a conservative approach of a trend formation. As long as it's above the T line, here's another entry. If I put an arrow, say here, you're above this T line. Now you are close to this 34 moving average, but if you want to just buy and hold when it's above, the moving averages, you can do that. Other ones I did well with was defend, so that's like Boeing and aerospace. A lot of stocks have crossed the 50-day moving average, and the 50-day moving average is sloping up now. And that's, some people buy stocks only when they're sloping average, the 50-day moving average is going up, or that it's above the 50-day moving average. And you can see we had a really good day, 16.6% in one day. So people, these things have been beaten up pretty bad, like Boeing, especially with the first the crashes and then the lack of, flights and stuff. And there's also aerospace in there. Nail is a home builder. I'm going to zoom in. Uptrend, broke through the 50. The 50-day moving average is moving up. The home builders have been beaten up pretty good. So have hotels. MGM did amazing, 11.3% yesterday. It's been uptrend since May 18th. So you could have got here when it crossed into over the 8 exponential moving average. You could get in here where it confirmed the higher low, like when you see it confirmed at the T line, it kept going. You also have here a doji and a gap up, so that's showing energy there. So it's still probably a good chance to get in to these. But obviously, when you're up, a fair amount one day, you have to be careful. But getting in near the T line, and you could even have a stop loss fairly close to the T line here. Whereas if you start to see parabolic, I'm not saying this is parabolic, but when you start seeing really good high gains in these daily charts, daily candles, it becomes a little bit trickier in terms of where you put your stop loss and is there any kind of profit taking and reversal and stuff like that. DRN is a good one that's been real estate. It's obviously been beaten up pretty bad, and you can see how same sort of scenario, broke through the 50 and the 50 is sloping up. Banks, there's regional banks. So DPST did really amazing, 17% yesterday. You can see how it's just starting to go up again off the moving average again, broke through the 50. Another one in banks, which is like Visa, MasterCard and all that. Been in a really nice uptrend for a couple of weeks now. And whereas this is a more volatile, sort of a sideways movement, we're starting to see an uptrend, better uptrend now. Obviously, all this stuff is up for change at any point in time. I've got a few Canadian stocks. This is an aviation one. It crossed through, or the 50 is going up, and it has a nice gap here. Did 9%, and potential targets way up here at the 200-day moving average. CAE, you can see the same sort of thing happening, an uptrend happening. Like if I draw a line like this, you've got an uptrend happening, and you're starting to see that like J-hook kind of thing where it's starting to curl up with more energy. This is semiconductors. They are fairly close to the 200 because these ones have been doing a lot better than other things like tech stocks and that. So we have auto parts have been doing really well for quite a while. You obviously would like to get earlier in the game by looking at the charts. But once you break through the 200, you have this doji kind of gap up here. That's another indication of energy. And Methanex, same sort of thing, doji. Nice candle here. 50-day moving average is sloping up. Jets is obviously all the airlines. That one has a lot of potential still because people are starting to, fly again and stuff. And obviously people are always afraid like there's going to be another wave of coronavirus or is there going to be a vaccine and all that stuff. But you can see from the riots that everyone's out and not really social distancing anymore. So I think that, things are going to open up and that should be good. But obviously I always focus on the chart and what it's doing. There's a small business, our small cap ETF. Small cap stocks haven't done as well as larger cap stocks, but they still in a nice uptrend for a while here. Same thing about the 18th. 30% there in a short period of time. Specialty retail has been doing really well for quite some time. So you can see here the 50 days rounding up and now it's coming up again. So we have this nice uptrend ever since the 50 kind of started to curl around and come back up. In Canada, here's another one, but in the States as well, real estate investment trust, Reits, they're starting to show some life. Square, obviously technology has been doing really well since the low on March 23rd, but like this really amazing uptrend from way back here. But you're starting to see more signs of life here again. And lastly, GE. These are all stocks that I bought and did really well. And I may get out when they start to show signs of decline. What I mean is the break of the uptrend or break of the T line, which is the 8 exponential moving average. So we've established a higher low here, you can see. And now the 50-day moving average is sloping up. And we have this J hook and there's gaps actually, which is showing a lot of energy. So GE has been beaten up pretty good. It's one of these industrial stocks. So that's why I like the Dow, hasn't gone up as much as, the NASDAQ. But other things you can do is look at pre-market stocks. So TC2000 has a pre-market scanner, which like this, right now I'm doing this video at 7 in the morning Eastern time. And you can look at media diversified. This is CIDM, it's up 86%. I don't really follow the big jumps, but these are ways that you can find potential stocks that are going to be moving. There's this Express Spa. You can see how it's ideally you want to get it at this moving average down here, and you start to see it curl up like that. So you could buy here and hope that it's gonna. You can not hope, but hold on until you see it, or you can put a line across a higher spot here and wait for it to cross up over that. So anywhere around here, would get you in line for that gain. So once you see this kind of this curling action, it's one of my great one of the opportunities that seems to work quite a bit. All right, I'm not going to go too much further, but hopefully that helps. I just wanted to give you guys an update. Had a really good day yesterday. We'll see what happens. There's always that sense that things are really going to boom. People have been waiting to get in the market who have been afraid, and they might be starting to finally get in, or the fact that people are going back to work and, going to hotels and things like that. But there are still some obviously concerning issues out there. But we try as best I can to just focus on what's happening with the candlestick. So an incredible day yesterday, and I think we'll have to be careful, but I think there's going to be a lot more because a lot of these stocks have been beaten up pretty bad. Like I mentioned, the hotels, cruise ships, home builders, energy, banks and stuff like that. So we haven't seen a real big recovery in the banks, which is really strange for a recovery like this. So there's still lots of sectors that have big potential, and obviously tech is still strong, but it's been up quite a bit. So sometimes you see a reduction in the tech stocks, and you're like, why is that happening? It's like, well, they've been bought pretty aggressively, and maybe people are shifting their money into the value stocks once they see them start to, because people were kind of moving into big tech stocks like Facebook, Amazon, ones that had a lot of money and could be safe from bankruptcy, and also cloud services and that type of thing, which were more valuable during this moment in time. Some things like electronic gaming, stuff that people were doing at home, Netflix, watching movies. And so there could be a move out of those because they've been doing really well, even though those are still probably going to be popular. But there could be a shift, and there has been occasionally, I've seen, from the tech into these value stocks. So something to keep an eye on, guys. We'll talk to you guys later.